Hi, good evening, everyone. Thank you for your time for joining us tonight. Tonight, we are so pleased to be able to host Silverlake Axis, our local tech company that is listed in SGX. A bit of a background of what Silverlake Axis does is they are renowned for what they have done in the banking industry, uh, core banking solutions, and since the inception in 1989. They have actually experienced a remarkable journey of growth, and they cover more than for almost more than 40% of the largest banks in Southeast Asia for their solution. And tonight we have our Mr. Anil Gill, the Senior EVP Strategic Finance, Chief Risk and Sustainable Officer, and that will be taking us through what Silverlake has done, is doing, and going to do in propelling forward for the company. But For those that has been following me, I'm Adrian Ng, and a bit shameless tonight, right? I'm gonna steal some of their time to do a bit of a promo, so-called sharing session before we start. Hopefully, Anil is good with that, Anil?
Please,
Yeah.
please,
Okay,
Adrian. Thank
cool.
you.
All right. So let me quickly run through. Let me share my screen. All right. Hopefully you guys can see my screen chat here. Here is actually
Not yet, Adrian. The screen.
an email. Yeah. Oh, yeah. Hi, sorry guys. I mean technical issues, malfunction, and well, Microsoft, right?
You're back.
All right, let me do a quick share again.
Yeah.
So this is my screen. Hopefully does anyone, can you see it?
Not yet. No.
Not yet. It's weird. Oh yeah, it's up.
Yes, now.
All
Yes.
right. So the first screen is actually a portal to a Telegram channel called Kenanga Trade to Win. Those that are interested in trading can check it out. We have daily news and even Bursa Malaysia's result being published there, and even dividends that are going X in 2 days. Whole list of it at a scheduled basis. The next thing is the KenTrade portal. I will not talk too much about it. This is a contra T+8. You can extend it for a period of time. But what is most interesting today, I would say that would be the cashback campaign for SGX, where you guys can actually earn up to cashback of 200,006 all in all. And I think it's a really good time to take the opportunity because even tonight we're actually hosting our SGX listed company, Silverlake Axis, and nonetheless our famous Naga warrants. And yes, thank you, Anil, for your time for that. Sorry for taking and also the technical issues. Pass the floor to you and Ryan.
Thank you very much. Thank you, Adrian. We appreciate this opportunity to speak to your Kenanga retail clients, and we appreciate everything that you've done so far. I think, ladies and gentlemen, what we would like to do is, I think we've all been through decks after decks after decks, so we would like to keep this light, keep this business
Yep.
focused. The numbers, I would like to put more color on top of it so that you get a real feel of our business rather than just trying to extrapolate that from the numbers itself. So
Yep.
if we go through, we have a very quick presentation, but please stop me at any time.
Sure
And
thing.
For questions, and then we also have questions at the end. I think this one is just a very quick one-page how do you say, introduction to Silverlake Axis for those who are not familiar with our company. We are a Malaysian company, 33 years old now, but we are listed on SGX, and we have been listed on SGX main board since 2011. So you're over 20 years on the main board of, more than 10 plus years on the main board, and 20 years on SGX. We are a solutions company. We have our own product. We have our own R&D in the sense that we develop product, we implement the product, and we maintain the product. We are an enterprise software company. What does that mean? That means we primarily we don't do B2C, we do B2B. All our business are B2B. And typically 80% of our revenue is derived from banking. And 95% of our profits are derived by banking, even though we have an insurance line and we have a retail, but we'll come into that in a little bit. So as of today, in terms of market share in ASEAN, and ASEAN is Malaysia, Singapore, Thailand, Indonesia, the four big ones, Philippines a little bit, we have a 40% market share. And as you can see on the bottom right-hand corner, you'll see some big names of banks that are our clients. In Singapore, we have OCBC and UOB, which are two of the three big domestic banks. The only one missing is DBS. We
have all the top boys, bro.
Yeah, we have some of the top boys. In Malaysia, we have 4 out of the 8 anchor banks are our customers. Now, in terms of margins, before this job, I came from banking. I was in CIMB and AmBank, HSBC and OCBC, and we measure margins in net interest margins. If we have like 10 basis points, accretion in a quarter, we will go out and celebrate. When I came to this business, I didn't believe the net profit margins, right? This is a software business. As you can see, margins wise, we're around a 60 to 65% gross profit margin, and we range 22 to 25% after tax margins. So you can understand what kind of a business this is. But we'll go a little bit more into the recurring side of it in a little while. In terms of product lines on the left-hand side, banking, InsureTech, which has insurance, retail, very small and also very heavily affected by COVID. We're rebuilding it today. And then we have a digital identity solution, which does some government projects. Okay, we go to the next slide, please. Right, so this is our FY 2023, which is last year. We've also released our first half 24 figures. We can go into that later. But in terms of revenue, we're doing roughly for this year, we would look at around 800 million ringgit revenue. Like I said, we're tracking a profit after tax margin of about 20 to 22%. EBITDA margins about 35%. So they're already pretty high. Very healthy operating cash flow. As you can see, cash and bank balances, we are roughly 550 to 600 million in cash at any one time. We have very low gearing, it's 0.2 gearing, and our EPS is at 0.06 cents in Malaysian. So what does this tell you? A very robust business. 2023 was a year of record revenue. We've never hit anything above 730 before. And I think we're expected to hit another record revenue in FY24. Our financial year is June 30th. So we have more than half. We've released our results for December, which is our first half FY24. But of course, we're almost clear through to our last mile of FY24. Typically, there is some seasonality in our business. The first Q tends to be slow, and then there's some pickup. Also, the January to March quarter tends to be slow because we have Christmas, Hari Raya, and Chinese New Year. So
people are warming back up to work.
Warming back up, and it picks up.
All right.
So in terms of our product lines, I think what is interesting about our company is that, like I mentioned before, we have our own product. We have 3 main product lines for banking. And what these 3, it's not just what the 3 are, but how the 3 are positioned. We have Symmetry, which is a Unix-based core banking card system, which is for frontier markets like Bangladesh, Maldives, the smaller banks, Cambodia, Laos, those people that want a core banking system without too many bells and whistles. Very functional, but a price point around $3 to $5 million US for an installation. Then we have our flagship product, which is SIBS, which stands for Silverlake Integrated Banking System. So SIBS is our main core banking system. And that would be in 80% of the installations of Silverlake, that would be the product that's installed. It's based on the IBM AS400 series. It's a highly stable system. And because it's very closed, I mean, everyone talks today about security, right?
Yep.
Network security. And a lot of people come back to us and say, you know, what about your security? So there's two pieces of good news for Silverlake Axis. One is, the more open your system is, the more vulnerability there is. SIBS being a very closed system, has been protected because of that system. Proprietary. Number two, as a software provider, once we deploy the software in the client's environment, the responsibility for the security of that software transfers to the client themselves, i.e. the bank. Unless there's a flaw in the code or a vulnerability in the code, which there isn't, you can't come back to Silverlake if you have an intrusion, right? Because that's your network security, which you are responsible for. So that in that sense, we also have a little bit of a moat around us, you know, which is good to have. The third product line is Mobius. Mobius is our cloud native, fully Java written, and it's a piece of software that we've been building for 10 years and has now been on the market for 1 year. In terms of Mobius, we have 2 clients at the moment. And why only 2? And that's because it's only been ready for a year. So the 2 are actually tier 1 banks, which are CIMA Commercial Bank in Thailand, which is a tier 1 Thai bank. And also secondly is Affin Bank, which is currently undergoing right now. Okay, next slide, please, Ryan. Right, so I mentioned this concept of, you know, as a software house, we have multiple revenue streams, as you can see in the bar on the top left. So actually, sale of software and hardware products is not our core business. It's a very, very small part of our business. But sometimes a client will say, we want the software, can you also bundle in the hardware? It's not our preferred mode because most of our customers can go and buy the hardware themselves. Now, licensing. So the on-premise model, which is currently the SIBS model, is predicated on this. How do we price? When a client says, okay, we want to buy a product, let's take an example of a 100 million ringgit installation. So we'd say, okay, how does 100 million is a total project size? The 100 million would be something like 20 million would be licensing. That means straight off, you sign the contract, you pay me 20 million. Then out of the balance 80 million, you have software project services. Now, what is software project services? It's customization to the customer. So SIBS is an out-of-the-box product, but you can customize it almost infinitely to your environment. So then that software project services may be another 40 to 50 million, and then the rest would be like a 5-year contract for maintenance. So that would be how the 100 million. So now the maintenance contracts, how do they work is that they go for 5 years, then there is a step-up clause in terms of how much we can charge. So it's indexed to inflation, and that is where the recurring revenue comes in. And what is maintenance revenue? That means we bundle a service to the customer to say that this contract allows us to maintain the system at the highest operational level. That means anything that has an issue with the system, it's based on this cost, we'll come in and we'll fix it for you. Okay. So basically, it's like your service for a car, for example, or warranty, right? Right. Now, the other part of our revenue is also enhancement revenue. So enhancement revenue is separate. So this is what you know, in the business you would call CRs, right? Change requests. So change requests are when you want to do something new, you want to integrate something new, you want to add a channel, you want to integrate with a new piece of software, you want to develop something new. Because we don't sell source code to our customers are unable to touch the software. So they have to call us back and we have to enhance it and we have to deploy it. So that Typically, maintenance and enhancement revenue has one of the highest GP margins, about 64%, 65%. So you can imagine, what the
And
profitability of this is.
for this enhancing change request, normally how you will take it will be by basing it on man hours, I presume.
Absolutely, Adrian.
All right.
Absolutely. So we have a published mandate rate, and
Okay.
yes, the margin is there. Okay, insurance ecosystem transactions about 52 million a year. We're growing that business. It's growing much faster in percentage terms, but of course, in scale terms, you can see there's a long way to go before it comes anywhere near the banking business, which is like 600 million. But of course, it's a growing business. Retail is extremely small at 4 million. Any questions up to this point, or shall we proceed?
For the retail processing, right?
Yes.
I mean, it's so small. Would you consider in the future not even looking at it?
We've had this conversation, Adrian, because again, from a business and a business strategy point of view, 4 million is even worth the trouble of maintaining this business. I think the view at one time was divest, but we've grown it back up again a bit, and I think there's some plans, but I think we need to grow it a little bit to get some value out of it.
Yeah, because
Right?
your other divisions are doing pretty much well.
Yes.
Basically, the software and hardware products is a flyby. Licensing,
Exactly.
licensing is something that you do. Project services
Growing.
is
Yes.
growing, and your enhancement is a cream of the top. And
Yes.
when it comes to the retail transaction
Yeah, I know.
processing, would it be too fragmented to focus the sales effort to even go there?
Yeah. So what we did with the retail business, Adrian, is we pivoted during COVID. We built a cloud based system, took it off-prem, and we focused on the pharmacy sector away from pure retail, like
Okay.
So Metro Jaya, like for example, was the biggest client pre-COVID,
Okay.
but they don't exist anymore. Aeon is still a client. So what we've done is we positioned ourselves a little bit differently. But you're right. There's always that conversation at 4 million revenue, is there really, but, we have a small team that still runs it. They're quite passionate.
All right.
And they've been with us for so long. There's also that emotional attachment, right?
And I think the passion from the team is the most important.
I think it's I use that word, with the passion. I think that the management sees, what, give them a go, let them rebuild. Let's see where we land with that. Yeah.
I like your management now.
Yeah. Okay. Next slide, please, Ryan. Okay. Just in terms of, so I mean, obviously, clearly as we're a vendor. Let's not let's be realistic. We need to sell product. We need to sell the solution. Yes, we can advise, but we also need to sell. So what we do is we track very carefully our pipeline, deals that we have in our pipeline. We also track win rates, like any sales focused organization. We track all these metrics. So what this slide is telling us basically is that, in fact, in 2023, we had a record year of deal closures. As you can see, almost averaging more than 100 million per quarter. And these are new sales, yeah? So, for example, if we sell something like in quarter two, the 146.5, that means we close the deal, but we won't recognize the revenue of that 146.5 because the revenue only gets recognized in later stages as we deploy, because we follow IFRS. And IFRS says you can only recognize revenue based on your percentage of completion. So what this pipeline tells us is that we always have a very strong, secured revenue basis. So if you take, for example, a target of FY25, maybe for 800 million, we would start the year with 500, 600 million secured, and we would only need another incremental 200 million to sell in that year to make that target. So it gives a little bit more certainty, a little bit more, consistency to the business. If we had to go out on day one of the new financial year and sell 800 million, new, it would be a little bit of it'd be a little bit difficult business.
So just to stop you there a bit, Anil. I mean, I was sharing with you earlier that I was a construction analyst in Kenanga for the longest time, right?
That's right.
So the way I see things is like the software counterparty is pretty much similar when you do not have the operating and maintenance part, which you guys have and built in. If you do not have that, means you're pure contracting and project basis.
Yes.
On that case, can you share with us, because I'm pretty new, right?
Mm.
How do you, let's say for this 600, is this your new the pipeline project is basically an outstanding order book,
Yes.
correct? And the new replenishment. So can I safely assume the run rate that give you the visibility is about 2.5 years for the pipeline value?
Yeah, so that's a really good question. So if we look at like our rough pipeline, 1.5 billion, you're right, it's about 2 years.
All right.
Yes.
Okay.
Yes.
Cool. But partly that wouldn't be the entire case because your maintenance is actually 5 years.
That's
You will tie it in. Yeah.
You tie that in. Yes.
Okay. Cool.
Yes. And like I said, we had a great year, 2023. I think if you see our announcement for 2024, our contract wins are also very high, almost 100 million per quarter.
Cool.
Okay. If you can go to the next slide, please, Brian. Okay. As with every business, we have a stated strategy that we employ, that we have developed, and then we are trying to implement. So I think this is just a very, very quick snapshot of what our strategy is. Being a solutions company, a technology company, we need to be customer focused. Our customers are all big banks. All the big banks tend to go through cycles of transformation. With the new digital banks that have come online, they've also been there's some sort of impetus for the banks to change. And, so basically we try to be a partner to our customers on their digital transformation. That's how we like to look at it, right? We know the journey that we've been with you for this journey for 20 years, but we know there's a journey that's coming up. That's a new journey. And we have the products, we have the solutions, we have the people. Let's do it together. Right. So one part of the strategy is engagement teams. We don't call them sales. Some software companies, we now call them customer success teams, customer engagement teams. So what we do is we walk the offices, we talk to the customers, we understand their needs, we propose solutions that are fit and proper for that customer. And then we make sure that, they're getting the success out of that product. Partnerships is very important to us because especially there's some countries in ASEAN, particularly Indonesia and Thailand, where it's almost impossible for any vendor to go in without a local partner. So we try to establish these partnerships. It's very clear. You need a good Thai partner. You need a good Indonesian partner. And, so that's something. But we have a lot of partnerships. We even have a partnership with Finastra, which is a global core banking company based out of the UK and owned by a private equity firm called Vistra. So that's part of it. We also develop, I mentioned, building our own product, licensing product. So we've actually bought product. Symmetry was a purchase. We bought it from SunGard about 5-6 years ago.
Oh,
and,
okay.
Yes. And SunGard were exiting the region. We bought it. We turned the company around. Again, all of this is done on the back of people, right? We are a people company as well. Our people write code. Our people deploy the code. Our people do the maintenance. Actually, it's all people. So if you can see, as our business grows, so does our people, so does our level of sophistication with how we deal with, attract, retain our top talent. And now the other thing that's happening with the cloud adoption is our customers want a software as a service offering. Now, let me explain that, right? So today with the on-premise model, like I mentioned before, you got your licensing, you got your customization, right? That's a big chunky expense for the bank, right?
Yep.
Suddenly off the bat, 20 million licensing, 40 million here, and then the rest is spread over the 5 years for the maintenance. Now the banks are saying, look, we don't want any of that. We want like a Netflix, right? I pay a month and I get this programming, like Astro, I got this module, that module, that module. I want a one price, okay? I don't want to own my own servers anymore. I want to deploy it on Azure or AWS or Google Cloud. So now we can go to our customers and say, look, we can do this for you, okay? We put it in an all-in-one price every year, and it includes everything. So you know there's no variation in price. So that's our SaaS, software as a service business. So we want to grow that business. And of course, we have a commitment to our ESG, and we also want to positively impact all our stakeholders, right?
Yep.
So these are our main pillars of our strategy. Any questions, or should we? I think we're coming to the end of the slide, so we should be able
How
to.
fast is the adoption to cloud now? Because even if I understand under Bank Negara ruling, right, your cloud need to be within the
Local,
shores of
yeah, onshore, right?
Malaysia.
So the issue with cloud adoption, Adrian, is for us is regulatory driven, right? So
Yeah.
the regulator has been a little bit, now that they're coming to terms with it, but prior to the last couple of years, it was definitely a no. But today, I think the Bank Negara is thinking about a hybrid cloud where certain data has to be on premise in the bank's own server, but you can put certain data, certain compute and certain storage in the cloud. Maybe the non-personal information,
Okay.
non-identifiable information. Maybe you can put some transactions, right? So you can have that hybrid cloud. But no regulator in Southeast Asia has allowed a full cloud model as of yet.
How about the digital banks? How are they doing this differently?
So the digital banks, the difference between them is they have no technical debt as such, right? Because they're starting from scratch.
Yeah.
So again, they're still fully regulated by Bank Negara, so they will still have to have hybrid cloud. They
comply to the same requirements.
Same requirement. And in fact, once the digital banks are out of the foundation period, they also have to comply with the Basel requirements. So they will become very much like a bank, you know?
Means it's just a label of digital bank.
It's labeled, and also means they have no branch infrastructure.
Yeah.
The biggest thing is the branch infrastructure, the lack of technical debt. That means they're not carrying, hundreds of millions, sometimes billions worth of investment in IT and other infrastructure that, some of the banks were like, okay, we want to modify, we want to improve, but what do you want me to do with this $1 billion of asset on my balance sheet? I'm not going to depreciate it in 1 year. I'm not going to write it off. So there's that reticence there, it keeps them, in a little bit of a bind. So that's the problem that digital banks don't have, the agility that they have today. So, and their processes, right? The bank is all about process, anyone who worked in the bank will know. Everything is process driven. You can rewrite the process, right? So that's where the agility comes in for the digital banks. But in terms of lending, end of the day, you still have credit risk.
Yeah.
You still need to put provisions, right? Yep. And if you don't measure and you don't monitor all this, what happens is Bank Negara will come and take you over or force you to merge with her. Actually, which is why Bank Negara actually was very keen that the digital banks, all of them, partnered with a bank. Because part of their reason for that was
fail safe.
Exactly, which is smart. If you fail, you don't cause a systemic risk to the financial system.
Yep.
How easy would it be for RHB to swallow Boost Bank, for example? It's like it's like a shark eating a sardine. It would be no effect, right? So that's how Bank Negara thought about it as well.
But coming from the cost of investment from so-called owning the so-called hardwares and also on-prem plus your licensing fee versus a cloud-based solution in the future, which will run more cost effectively on the longer run, because the way I understand about cloud is about your frequency of load.
Load.
That is like a TNB charges after certain rates, it will go pop.
Yes. Yeah. But the cloud providers are very smart. They also, you're right, it's load driven. But they also have load balancing. So that allows you to, like, for example, they also know where their off-peak times are.
Yep.
They offer you preferential rates for those off-peak times. So, for example, if you're doing some processing, they will say to the bank, 12 noon to 12 midnight on Saturday, We can offer you a better rate. Why don't you do your processing or your interest calculation on this day rather than that day? So it will always work out. It will always work out much easier, much cheaper on the cloud, because so much of the infrastructure cost is outsourced, right? Your security, all of that outsourced, and the AWSs of the world have to take care of that. Or the upgrades, the downtime, you know, the BCP, all of that is taken care of. So there's excuse me.
No in-house technical team.
Exactly. In the new world, there's no comparison.
Okay.
And the cost of cloud is also coming down, right? Cost of compute is coming down. You know, cost of storage is coming down. So over time, you'll see that flattening, and then there'll be there's no comparison really after that.
Okay, that sounds more palatable.
Have you seen that? Have you seen Jeff Bezos's new boat? You wonder where that comes from.
From a villa.
AWS.
Yeah. I mean, they have this leadership course that you pay an exorbitant amount to teach you how to write a headline.
I know, but it's amazing. We have a partnership with them, and I can tell you the way these guys are, they're a world different apart from the way they look at business, the way they look at partnerships with people like us, way above. You know, we can learn a lot from them.
That's interesting. Would you mind if you fall back to your segmentization a bit, where you have the part of the banking,
the revenue segment?
Yeah, revenue will do, because maybe we can dive in a little bit more on
Ryan, will we go back to the revenue breakdown slide? Yeah, that's right. Perfect.
On the InsureTech. The InsureTech seems quite an interesting space that and the sector is actually really huge. What I understand after I've read up about the company, right, is you guys are doing a lot more hire purchase insurance in that context.
General insurance, yes.
General insurance. So would there be a footing into the life insurance in the future, or is it something that's more challenging to integrate up together?
It's a great question. So our insurance ecosystem is primarily based on a claims module, right? So what we do is we process claims for general insurance. So 5 years ago, 95% of our business was general. Today it's come down to about 85. So we do have some medical, some travel. So yes, we are trying to diversify that. Yes. But as you say, they're all very different.
Yeah.
You see, because, you know, general insurance is basically motor accidents, right? So you have your repair workshop, you have your spare parts guys. When it comes to medical, you got doctors, hospitals, you know, supplies. So it's very different. So configuring the insurance for different types of insurance policies, it takes time, but definitely it's something that we're trying to go to. So we're trying to diversify that.
But so if I'm getting this context right, is the moment you're able to set foot in to one of it, it will be quite sizable and very long term.
Yes, this it's very sizable for long term because of our relationships with the insurer, right? So it's AIG, right? So wherever AIG, we go to wherever they are, and it makes more sense, right, for AIG to say, okay, fine, you're already handling our general claims. Why not our medical claims rather than, you know, one I have in-house, one I have outsourced, you know. So over time, we work with these partners, and we do definitely, you know, move closer to getting a very diversified base in our insurance. It takes time though, like I said, because, you know, we have to onboard the clinics, the doctors for medical, for travel, we have to onboard, then we have to, you know, so yeah, it takes a little bit of time. And sorry,
for your insurance, I think it does lot. But once you are able to set up the whole network, then that is really
and very sticky business, right?
Yes.
Because once the insurance company has outsourced its claims, I mean, it's again like it's the same old adage, right? Like, for example, a bank in a mortgage, they will, if you don't pay, they will take possession of your house, but they don't want it. That's not their business. You know, what they want you is to pay them. They want the annuity. But so similarly, claims is an evil that is necessary part of insurance, But if they could get rid of it, they would get rid of it. And they have got rid of it. They say, you know what, the whole claims department, bye-bye. It doesn't exist anymore. So to take it back and put in another 50 people, 80 people to do claims, they don't want that. So it's very sticky.
Yeah, because they will have lower fixed overheads and that goes
Exactly.
on a variable cost, which they can time it up.
Exactly.
Okay, okay. So in terms of region, right, next phase of growth because I'm looking in the context of now you're already really good in the so-called maintenance and enhancement services.
Yes.
Malaysia and Singapore is where the bread and butter is.
Big business
Which
already.
region among ASEAN or even the Southeast Asia part would Silverlake be laying your eyes on for the potential growth of in the next 2 to 3 years?
So we have two main regions, I would say, that we are looking at. One is we're looking at Manasa, which is Middle East, North Africa.
Oh,
okay, and Eastern Europe. So we have some business already in Hungary, in Latvia, Czechoslovakia. So some of the smaller Eastern European banks are already our customers. So that's one part of the business. So we actually just got a new guy, a new business, a new gentleman to head our business, which we call Manasa, and we opened an office in Dubai, and he's running it out of Dubai. So that's one area of focus. The other is Philippines, Vietnam, Laos, Cambodia, so Indochina plus Philippines. So we've not been very strong there historically. We've had some business, and as our business in Malaysia, Singapore, Thailand, Indonesia grew so large, we kind of took our foot off the accelerator in those regions. But now we have our new client engagement, directors sitting in those countries and also building business in those countries. So that's where our focus is. Look, we know Northern Europe and the US is not our market, right? It's difficult to manage from here. Number one, you're talking about the competition is a different animal altogether. You're talking about, 80 billion US dollar market cap companies, 40 billion market cap US dollar companies who are the incumbents in that market. Honestly, you also need to know in business where you can play. And we know that this part of the region. China and India are close to us because China, of course, is now all going homegrown.
Yep.
No software vendor from out of China. And then you've got India, which is, like huge market, but made out of, it's very complex, right? So
very complex.
Yeah,
Bro,
very
very
complex.
Every state is a different country.
That's right. That's what they say about India, right? It's not one country, it's like 10. Yeah, exactly.
Yeah, no.
Yeah.
It's a different world.
So we like to know our limitations, focus on the markets that we have the potential to scale and then focus on that.
Okay. That has a bit more clarity. I read up the annual report and I realized that for a software company, do correct me if I'm wrong because I'm pretty new in this tech scene, right? What I see is the next phase of bread and butter to keep the company going is R&D.
Yeah. Yes.
So the question is, now that you have a cash pile of almost 500 million, and is there a schedule on how much the management have already set apart per year for R&D purpose?
Yes. So we have a soft target of 8 to 10% of our revenue a year on R&D. Okay. So you're talking about 60 to 80 million a year.
Okay, cool. And mostly it's on an enhancing basis, or is it like a new?
Mostly it's enhancing the versions of our SIBS product, building new versions of our Symmetry product, and of course to continue to develop Mobius. Because Mobius, we have the core banking module built. We're currently building a cards module. Actually, if you ask, it's a funny question. If you ask the software architect of Mobius, and many people have asked him, when is Mobius going to be ready? He will give you a very strange look, And
Never ready.
Never ready.
Yeah.
Because in this business, Adrian,
it's evolving.
It's so evolving that by the time we finish a module, like example, then now customers are asking, okay, what do you have in AI? What do you have in this? And then either we've already built it, which we were lucky, or if not, we will have to say, let us come back to you, and we have to go and architect it and build it.
You pointed out a very, very interesting keyword called AI, and I always make a joke of it.
Mm.
Obviously, my name is Adrian, right? Sometimes I'm not too smart, so make a joke, Adrian's intelligence, you want to. But having said that, right, I would you be considering a business where, in the AI scene that now you're already doing all this processing for all the main banks, right?
Mhm.
Would you actually, and because the system is proprietary and the data is also highly sensitive, would you be considering of building up a large language model for your client itself?
I
Because
think.
what I understand from a friend in US
Mm,
that works in HP, right? That's
mm.
practically what she does for her clients.
Okay, so I'll answer that in two parts. One is perhaps not answering your question in the first part, but the second part will. Is that yes, we are building up our AI capabilities. We have some, but we're building new products to overlay and to help our customers to make sense of all the data that they have. Now, but the second part is, look, to build a large language model, right?
Yep.
When there's so many already in the market
Yep.
and are so advanced, we looked at it. Doesn't seem feasible, especially like, for example, if you buy an enterprise version of ChatGPT,
Yep.
and you deploy it in let's say the bank deploys it in their environment, that enterprise version, whatever data is fed into the model doesn't go into the learning model of the ChatGPT,
ChatGPT.
the one that you have on the web. Yeah, it's
Yes.
closed to you. Whereas in the one that you go to OpenAI and you put in a keyword, all that, whatever information you upload becomes part of the repository
Yeah.
of the large language model. So with that kind of offering that OpenAI has now for the enterprise version, and before long, all of them will have, it would make it very uncompetitive for us to. And in time, what will happen with these large language models, they will become utility, you see.
Yeah.
If you go to like Hugging Face, for example, you'll find that there's so many open source LLMs that are available.
Yep.
So actually, it's the LLM is only a small part. Is what is the data that is fed to the LLM,
I
that
mean, how you feed the data.
how
I
you
mean,
feed the data, how proprietary the data is, and how closed it is. I mean, those companies with the largest amount of data, they always have the advantage because the LLM would be so better
yep.
trained, right? So I mean, that's how we look at AI.
Okay.
But
Okay.
we do have a subsidiary that is looking into AI additions for our customers, how to
Okay.
help them, on that journey.
That will be quite interesting to see when you launch.
Yes, yes. We'll probably make an announcement about it somewhere in the next quarter or so.
Cool. I mean, I
I'll
will
keep
follow through
you,
with that.
I'll keep you
In the loop.
in the loop for sure. Okay,
Okay.
Ryan, I think we can move on to the after. Do we have anything in the interest of time as well?
Yep.
Yeah, I mean, FY22 highlights are very much similar.
The
People is just an extension of the focus.
Yep.
Okay, next, please, Ryan. Anything else? Okay,
Mission
obviously we
initiatives.
take ESG. I'm also the sustainability officer, so I have to talk 2 minutes about this. Otherwise, I will get fired tomorrow.
Please do.
But I'll keep it very simple. I know a lot of people are not believers. Okay, doesn't matter. If you think about it, nothing. I always get this question. Oh, Anil, do you think it's a little bit of overhyped? And I say, well, maybe, maybe not. But let's look at it. There's nothing wrong. I mean, if you help to look after the environment, how's that bad, right?
Yep.
If you help social projects, you help your people, how's that bad? It depends how you look at it. And governance for LISCO, for where you have stakeholders, investors, how's that bad, right? So if you look
That's
at it
ultimate lah.
ultimately, right? So I think we will just go very quickly through environment. We're a software company. We really don't have a lot of environmental impact. So we try to just do our energy, We have some targets for carbon neutrality, and we dispose our waste, right? That's it. Social, big for us, right? People, again, we have, we have diversity and inclusion metrics that we track. We have obviously employee satisfaction surveys we do every year. We promote healthy work-life balance as well as talent succession plans, et cetera. And we also do some community development, right?
Yep.
In terms of governance, we do the full suite, right? Because we're SGX listed, we're regulated, we got MSCC Section 17A, we got cyber, right? So we have full programs for each of them. We have anti-corruption, anti-bribery, anti-corruption programs. We have our whistleblowing, we have code of conduct and ethics. We do our regular audits. We have cybersecurity awareness programs for our employees, phishing, all the scams are there, what not to do. And we also do a lot of certification, right, for our network and infrastructure, network security infrastructure. So that's basically
on your governance, Anil.
Hmm.
Is the major shareholder has a larger influence on the day-to-day, or is it the professional managers that?
Professional management, the largest shareholder is currently executive chairman.
So he has taken a back seat and more on the compared to last time.
I would say so. He definitely doesn't get involved in the day-to-day. He's very at the strategic level. But we've also announced this that next year, January 2025, his daughter Cassandra Go will be taking over as the CEO.
Okay.
From Andrew Tan, who will step down at the end of December 2024. So
I think that's good. That's good that you have this announcement plan out, and
continuity. There's a succession plan, and in a day, 74% shareholders is 74% shareholder.
Okay. And how old is Cassandra, by the way?
I would say she's in the late 30s.
Ah, cool.
Mid to late 30s, something like that.
All right.
Okay, Ryan, we can cycle through. Yeah, I think we can cycle through this. We just is our and I think this is what what we wanted to do for 24. We've talked about a lot already. Extend market coverage and reach, right? Customer-centric values, invest, position, product suite, right? And we want to become, evolve from a regional organization to a bit more of a global organization in those regions, and we want to become known as a world-class. We want to inculcate world-class standards into our business so that, it becomes easier for people to invest in us, to have that trust in us. And, we play a big part in the financial ecosystem, right? Because if you think about, all the outages that DBS had over last year, for example, right? And,
that's because they didn't sign up with you guys.
Yeah, exactly.
That's a joke from me, not from you.
That didn't come from me, but yes, so I think, we play a very important part as partners to not just our customers who are the banks, but the people who bank with them, so there's a high trust here. So I think that's part of our priorities for 2024. Right, I think that's the last slide. Just key highlights. You can see them all this is our first half of the year. So just to say our margins are still healthy, revenues up, net profits are slightly down, that's slightly because of OPEX, which, I think the whole industry went through a period of time where we had to pay higher wages for very scarce resources, which are people. I think that's moderated now. So I think we will be able to flatten that curve going forward.
Sounds good.
All right, I think that's it for the slides. If there's any questions,
we can take it from the floor, the questions. Let me do a bit of a quick one here.
Sure.
For those that is looking to have more questions asked, you can actually type it here. Hi. In the chat box for a quick one instead of Q&A. And in the Q&A box, we have Chichai that has actually posted two questions. The first one that he or she that is really interested in was the related party transaction still contributes at least 10% of the revenue. Could you please explain what kind of services are provided to the SPE?
Okay, good question. Right. Kichai. So I think that the thing is Silverlake Axis Limited. So the company that I represent, the group that I represent today, the listed company, is the business that we just described. Mr. Goh, the controlling shareholder, has what he's called part of SPE, which is Silverlake Private Entities, which are private to him. He runs them. They're not part of the listed group. So we have both revenue from the private entities and we have costs that we pay. So there's some outsourced services, like say for IT, for some services that the Listco, Silverlake Axis Limited, would pay one of the SPEs to perform. That's one part of it. It's very small though. The bigger part of it is that one of the SPEs would have gone and got a contract, for example, from Bank X, and they would have gotten the contract, but this SPE doesn't have the IP, doesn't have the capabilities to go and deploy the project. So then what they would do is they would outsource that project to us, and that's where our revenue comes from. There's a margin for the SPE. There's still a good margin for us. As you can see, our margins are pretty thick anyway. And so that's the way traditionally that business has been run. And it ranges, like I said, sometimes can go up to 15-20% of revenue, depending on the deals that have been secured by some of the Silverlake private entities.
Okay.
I hope that answers the question. Is that sufficient, Adrian, you think? Or?
I think that's good. Partly, I think the mode of the arrangement is how the company has always been running it very consistently, and that's the most important. What I find is a red tape in most companies is the inconsistency of how they have put out their best practice in running the business. So in this case, while it's still palatable in the context here.
Yes. And also remember, from the governance perspective, it's reported, it's audited, right? It's there in our annual report, not hidden, right? We follow the
transparency.
Transparency is there. Yes, there are, there have been, issues in the past with other companies, with IPTs. We know that, which is why we have the rules around it.
Well, from the world that I come from as an analyst in property and construction, then it's the land deals.
It's been quite bad. Yeah, I can imagine.
So
I can only imagine.
Yeah.
Right.
So there's another question
from
I see that, Chichai. Deals running through the pipeline. Could you please explain what a few reasons are for lost deals and carry ones?
Okay. Losses primarily could be pricing. So when a bank does an RFP, they will not only come to one person, because that a bank's governance structure is as strict, if not stricter than ours. There's no, everything has to be 2 or 3 vendors that they have to. So it could be price. It could be functionalities that they want that we don't have and they want, it's possible. Basically those two, price or functionality. Could be timeline also, in the sense
speed to market.
Speed to market, like, if it's a big deployment, we have to balance what we have in our pipeline. If it's a new company that has no customers, they can say, I'll start tomorrow. We can't. Mobilization takes us time depending on the size of the deployment, right? So that's one of the big reasons now. KIV deals is sometimes the bank does an RFP, they look at their own IT and say, you know what, we don't have the bandwidth to do this deployment now. Let's hold, let's wait. Or sometimes economic conditions change. Banks are very susceptible. Something goes wrong, the bank says, you know what, I got to watch my margins, I got to watch my NPL formation, I got to wait and see. Not my priority right now. I can live without. I put it in the back burner. I'll come back to you guys later. So those are the 2 main reasons. A lot of the add-on application side of our business, the bank doesn't need to do it. Add a new product, add a new feature. If times are bad, they'll say, you know what, I don't need this right now.
Just curious, Anil, just to follow up on that and the competition. I mean, in Malaysia and Singapore, who is your biggest competitor? I'm trying to look that up, but then I wouldn't have a clue about that.
It's always difficult because there is no ASEAN-based competitor for us, right? So when we look at global competitors, I would say you know, I would categorize them in two buckets. One is the old world, new world. Old world, what do you call it? Would be Temenos, Finastra, FIS, and TCS. Those are the big four, I would say, our old world competitors. And of course, you got Oracle Financial Services, so maybe five. New world, you got three, which are very strong. Mambu, MAMBU, Thought Machine, and 10X. So these three are the new competitors, all cloud, all, you know, cloud native, all built from scratch to be very, very modular. And those are the main
and they are based out of US?
So Thought Machine is US, 10X is UK, and Mambu is out of Holland.
Ah, okay. Interesting. Very interesting. All right. That solves a big question mark I've been trying to ponder about.
But problem with the three new ones, all private, so hard to get any data on them. Almost impossible. Apart from the evaluation or the last round, revenue, all that is very difficult to get any information, Adrian.
They did a private seed funding, is it? What kind of valuation were they?
Oh wow!
Last
So
raise?
the last raise for Mambu, I think, gave Mambu a valuation of about 3B US.
Wow.
Yep. On revenue of about 120 million US. So, and probably zero profit because, you know, they're in that cash, they're in the burn stage, right?
So if you can, if you can position yourself more
That's right.
to that
So,
tune, you can bamboo them.
Yeah, definitely.
Okay, that's
We wonder
crazy.
why no one value us like that, right?
Yeah. The valuation is rich. I mean, in my
Crazy,
perspective.
crazy. Yeah.
Right. Okay. I think we have still a bit of a time if you don't mind me sharing a slide and a chart.
Please.
So guys, we are looking at let me just close off the ones. We are actually looking at the weekly chart for Silverlake Axis, Anil here. And I think I'm trying to get a range, see what has happened that, you know, the share price has actually went down for a bit. But what I always tell our webinar followers, right? They are always catching the webinar at a very good time. Why do I say that is, if I look at where Silverlake Axis has been positioned in terms of the share price performance recently, of recent years, right? I would think that given your record performance and the stability and how the earnings are being churned out, and also the 30% payout, correct me if I'm wrong, for dividends.
Yes, 30%. Yes.
30% payout, net cash company, proud of being a Malaysian company and listed in Singapore, which is quite a testament. At this level, I would say there's actually really limited risk to participate in.
I would echo that, you know, if you look at our PE even compared to our
It's about
competitors.
12 times.
Yeah, it's like, yeah, so
12,
yes,
13 time range.
yeah, 12, 13 times, you know, 13 times.
Yeah.
If you look at forward, it's probably around 12. But you look at our competitors, like, you know, Tata is 18, Temenos is like more than 60 times, you know. So if you look at that, you know, it's still trading very, very low. So if you look at target price, even from Philips and CIMB, CGS, or now CGS,
they are at
they
36 cents.
36 cents, yes.
Yeah, I did a quick check even on consensus.
Yes.
Your consensus is 36 cents. There's three analysts covering it: CGS, Andrea Cheong, Philip Socrates, Glenn Tam, and also DBS.
That's right. Leaking.
Yeah.
Yes.
So it's I think that's yeah. I mean, this is what the very least that I'm bringing to the table for our audience here. So yeah. Something to note for our audience.
I mean, volumes are not huge because, you know, as you can know, the free float is, you know, is
a bit tight. Yeah,
it's a bit tight, you know, but they can also move fast, right?
Yeah, it could because the free float is pretty
Yeah.
quite squeezed. And in that context, also, I went and checked on the shareholding list. Also, it's also well participated by good instis. So I think when the market starts to turn, or before, what I think, I mean, it's a very great opportunity tonight to be able to speak to you yourself and even getting to know Ryan. It gives me a really good understanding about the industry,
Thank you.
something I've never actually touched and talked about. And looking at how the management and how they have governed the company with the current share price and the payouts, I think we always have very lucky timing for our webinars. Yeah. So I think it's good opportunity for those that are looking at the longer term and some exposure in the tech scene. You can actually really take a deep look at it. If you have any question, you can actually pop it to me. My email is here.
Yeah, and we'll be happy if you pop it to me after that. We're happy to help with
Yeah, and
answering that.
also
Yeah,
Anil
yes,
and Ryan, we
yes,
can accommodate a probable
yes,
session if the size is
definitely.
good enough.
Yes.
And yeah, so if there's no more questions from the floor, and now it's at already 9 p.m. I hope that Anil already had his dinner. If
I
not,
have, thank you.
yeah,
Got young kids, so I have dinner at like
yeah,
6.
okay. So I think we'll not keep him too late here. All right.
Thank you. Adrian, really appreciate the opportunity to speak to your customers. Ryan, thank you for organizing and helping with everything.
Yes, and
Appreciate it.
Amanda also from
Amanda
SGX.
for SGX, really appreciate it. We'll keep in
Yep.
touch, and hopefully the start of a long engagement with all of us.
Yep. Thank you.
Thank you.
Bye.
Bye-bye. Bye-bye.